Okay, folks, I'm going to give you a recap of today real quick and just remind you that the whole month of September is just an illustration of efficiency. In other words, are we able to see things ahead of the fact and be able to anticipate where the markets are going? If I cannot illustrate that, effectively over the course of a week, multiple times, my goal is obviously to give you something every single day. And so far, we've been doing that since we started last week in August. I know some of you are all itching, wanting to do position trading and all that stuff, but there's a curriculum in this. And the first month is just, number one, to show you in advance where the markets are going to go. And then month two, we start taking the things and breaking it down into a digestible way of using it, and we start building on that. Okay. If you're not patient and you think this was signing up and you're going to download 12 videos and then you can ask for a refund or cancel the subscription, surprise, I told you that wasn't going to be like this. Okay, so it's 12 months for a reason. I'm dragging it out there because I need you to spend time on individual concepts. So if you're not seeing value in this, obviously I had two people, throw in the towel today, and I can respect that. If it doesn't fit for you, it doesn't fit for you. But there is no coming back, because I don't want the problems of dealing with bringing back people once they leave, and I just don't want it. So either you get in here by October 1st or you're done, and that's it. That way the group is manageable. I know what I'm working with, and it is what it is. So that's the housekeeping portion of the presentation today. We talked about the London session this morning, and I didn't really get a chance to sleep, so all I did was get something to eat, and my wife kept me going talking about the issues that went on last night on Twitter. But we're looking at a consolidation still on the dollar. We had a little bit of an upside slant relative to, let's go out to an hourly chart. And we talked about this order block down here. Price came down to that, and we hadn't reached for any liquidity on the upside. Okay, so we did run the stops below here. We did hit an order block as well over here, and it came back off of that. So what we were indicating during the London session was, while it's not terribly bullish, I didn't see it as overly bearish either. I thought that we would look for the liquidity above the highs, and we saw that today, just swept above it just a little bit. And we mentioned that Euro was going to be in a consolidation. It's probably in everyone's classification a nice trading range there too. And as we were watching London, I had mixed opinions about what I thought cable was going to do. And we're going to talk about that real quick, and then we'll close it with Euro Pound. Well, actually, let's go to Euro Pound, because if we know consolidation was in Euro Dollar, we were looking for, obviously, the breaker was the upside first, and then if we got through that, we would clear out these equal highs, and then an old high back here. It did no, it didn't stop it at all. Went right on through that. Cable has nice slide today, and Euro being kept in a nice tight range. You guys know from the free tutorial stuff what that will do for Euro Pound, and it's like steroids for this to go up. The only thing that we didn't see pan out that we were watching was the Aussie. We were looking for a little bit of a movement here, but obviously if the dollar's going to go up, it's going to be really Aussie dollar to do that. We were giving two illustrations here. If we continue through, we would trade, and I'm not going to recap all that stuff that was already in the presentation this morning. And if we broke through this low here, we would use it for a practice session for turtle soup. So that's the dog of the day. Pound. Okay, we had this liquidity void over here. We've talked about this for a while. I wasn't terribly excited about this one yet, because I didn't know what we were going to see in terms of the London session because of the 4:30 release of CPI, and I think two other ones that came out that were medium impact. And then we had 5 o'clock in the morning my time. Draghi was going to talk. And then an absence or a vacuum of any news coming out during the New York session. So I got one more thing for your notes today. If there isn't anything going on in New York, okay, and you have high impact stuff on London. Uh, Barring the speech, because the speech is kind of like a wild card. You don't know what's going to be said. You don't know how they're going to use that information when it's spoken. That was one of the things I was weighing out this morning because I was looking at I was looking at a, where are we at here? I wanted to see a run one more time to get up into this little area up in here. And that would have been enough for me to trust the move going lower into the day, even though I said I would have never shorted it, and I didn't. I gave you the levels in that recording I was doing when I was doing the live close of that long dollar CAD trade. I briefly showed all the levels for, well, these levels down here, which I'm going to explain. But at that point, I knew that obviously the range was going to expand to the downside because cable was allowed to move. It was being lowered in price. It was repricing lower, and fiber was maintaining that tight range. And dollar had a slight slant to bullishness, as we were describing earlier in the London session. So with those ideas in mind, modestly bullish to neutral on dollar. Cable was falling out of bed, didn't respect any of its order blocks. Euro dollar was moving in consolidation, and we had further upside for euro pound. After we took this level out, we knew there was clean levels of stops here, and then obviously if it's going to run here, it's going to come all the way back up here and run that. I'm a little surprised that it ran this much through it, but that's always something good to be surprised by. And, you know, it's a terrible thing when it never gets to where you want it to go, but when it gets through it, it's even better. So I don't mind leaving a little bit of fat on the bone for that. Not that I took a trade, but in my analysis, I'm okay with that. The pound, if we go out to a 4-hour, or down to a 4-hour, okay, you can see we did clear the stops up here. And what I was looking for, I was wanting to see if this stop run here would set up a further run into this area. I wanted to see this area tagged one more time, and it didn't do it. And as I watched live this morning, with all the questions that were coming across in the presentation, I was getting bombarded with questions about, you know, what about this, what about that candle, and between all that and the fact that I wasn't really watching Euro Pound because I was distracted with everything else that's going on. As soon as I looked at Euro Pound, and it was honestly by a prompting of one of the community members, they said, look at Euro Pound. I said, let me take a look at that real quick. Because I started thinking to myself, wait a minute, Euro's in a consolidation, cable's sliding. We're probably going to see Euro Pound rally. If that's going to be the case, Euro dollar is going to be maintained in that tight consolidation as we saw here. So during the London session, I said that we would probably wash out these lows and see further upside for Euro Pound. We saw those things. Now, if that's going to be the case, that bodes well for bullish dollar CAD, which we'll close the session with in a moment. For now, as the market was coming down, we were halting just above these equal lows down here. Okay, this is another liquidity pool. Price was coming all the way down here. That's not going to turn around there and go up, especially when Euro Pound has upside objectives and Euro dollar is being held in a slight, real tight consolidation. So if we drop down to a 15-minute time frame, you'll actually see the New York session set up right in here. Bearish order block, came up, hit it, middle of the range, then expansion on the downside. And you're probably all wondering, where did I get these levels? Here. What I did was I took a fib and I used the low here, not the stop run. That's always going to be erroneous price action. It's just going to just be a run on liquidity. I want the absolute low that the market stopped at, not the raid, because the raid's going to be different on everybody else's feed. And here's profit objective number 2. All I did was pull it from this low up to the high, and the projection down here. You get the I think it's 162. Let me double check, make sure before I say something and throw you guys off. Profit objective number 2. Yeah, 162. 162 is the, just for completeness sake, you guys want to know what my fib levels are. I'll scroll through them real quick. You guys can see. You just put your fib together like this. Make sure you put all rights reserved, copyright, inner-circle trade. That's good. And you end up with a fib like mine. And that's the objective I was reaching for. And now, why that? Why not do the 100% measured move, whatever that low is, up to the high, minus this low down to here? Why not get a perfect symmetrical price swing? Well, because obviously it's already moved a considerable amount already for today. And I think this range in here is going to need tomorrow to completely close in, and then probably run below the lows here. This has really got my interest down here, because if we lose this range here, this is probably going to make a run for this. And as much as I don't want to be a seller, I'm still not going to short it, but I think we could probably end up going down here for the week, potentially. So as the market was reaching down for this level, again, I like first targets. I don't like all of the meat. Okay, I'm not trying to be a glutton. I just want to know where the market's going to most likely go, and I'm okay with that. If it went down to the order block, which is this level down here, over in here, that would have been just fine by me. I could care less. If it went all the way down here, I don't care. That's a nice range from the New York session down to here. That's all you need. Now, this is some of the things I say in the tutorials, and you actually got a chance to see it this morning, because as I was watching cable, I had a change in gears. And while I was looking for something to give me some bullishness in here, as soon as 5 o'clock hit, we gapped down through that. And it just didn't have any momentum to get back above it. And then I was looking at the Euro Pound live and the recording, you can actually see that. And then you watch me actually change gears. What I was expecting to see in London didn't give me any evidence to that at all, none. And I talked about the likelihood of it rolling through and taking out these stops down here. And then obviously if we go below these stops, we have to consider what that range would be in terms of the void over here. Now I want you to look at this. This is cool because you're going to see this a lot when you're doing your studies. When you have a liquidity void or a very big exposed range, define it very well. Okay, you have the low here, you have the high here. There's no other candles in this range. This one stops here, this one stops here. So all of this is just inside this one candle. So that range there is very porous, it's very thin. It's also what? A range. It's just a simple range. So the sensitivity of that range is going to be the same thing in terms of equilibrium. So if we measure that range, there's your equilibrium price point. I'm going to take this level and make another one. Drag it right up there. And look at the sensitivity. The first time it hits it, it hangs around there for a little bit. This is a first target idea. Look how much it hung around there and spent time sitting at that level. Look at all that congestion right there. And finally it releases down to the daily objective. 162 extension on this measured swing. And if you have my old tutorial, swing trading, that's what this is. All I did was use that real time today and gave you this example how it can happen. What I didn't like is it spent too much time in all this, okay? And in hindsight, I can see now that it would have been a nice sell when we were watching it live, but it's just too many things going on one time. And like I said before, you're going to miss it. You're going to mess up things. You're going to expect something to happen. You're going to miss trades, and doesn't matter. You can still find something else in the day, especially if you understand what London's provided for you. So while for me it was low probability for London, it gave me the idea that dollar CAD, if this is going to go softer, and I don't want to be a seller of cable, and you're probably saying that doesn't make any sense, ICT. Your tools say it's going to go lower, but you don't want to sell it. I told you why, and I've been telling you for weeks. I just don't trust cable right now as a seller. I just don't want to do it. I'm afraid that as soon as I get in there, I'm going to have that, man, I should have just listened to my gut and not did it. and I don't care. I'm not hungry for the money. I just don't want to do something I know as a trader doesn't fit my psyche. So it can have all the glorious sell signals it wants. I'm just avoiding that side of the market for cable right now, and I'm okay with that. But because of that insight I had for pound dollar, it took me over to US CAD, and we talked about this also in the session, all before the fact. It was likely to consolidate in here, okay? And once we see a consolidation, it would probably run up through, run the stops at 131.50, and the old high is over here, right there. And it comes in at 131.52. So we're going to round down to the nearest round mid figure or 10 level, 131.50. The high, which is going to expand again, we have 131.76. I could care less. I could care less. 50 pips, just like that, outlined in advance, telling you, based on other assets and other currencies, I wasn't willing to trade. I was really interested in this one because it had all of the hallmarks that would be expected. The dollar had a slight bullish slant to it. Euro pound had upside objectives. Euro dollar is being held in consolidation. That means they're going to let cable rally lower. Okay, so if pound dollar is going to rally lower, that means they're going to at least keep dollar neutral to bullish, because cable, if it's going lower, fiber and dollar can't be in consolidation. There's going to have to be some movement on one of them. And we arrived at in London that the dollar had already probed its lower end liquidity with this area down here, and nothing on the upside had been swept for stops. So you know above your current market action in here, that's where the market's going to draw to. So if that's the case, then we have a built-in dollar CAD. It's going to go up, and it's going to go up to reach for liquidity, just like the dollar. Just like the dollar. It's all in the same playbook. So I'm trying to think if there's anything else to dress this pig up, but that's all the lipstick I got for it. I did most of the talking and outlining it in the London session, but just for completeness, let's look at the dollar yen. See what kind of intraday action it had. So it had some lift in it as well. Not terribly bullish. And one more quick look on the dollar Swissy, and it had slightly bullish, very modestly bullish. Okay, so admittedly, it's a tricky day. I earned my stripes today. I don't make any bones about it. London for me was a deciphering from real time to figure out what it wanted to do, and it's okay. It's okay to not take the trade and get insight, because it gives you the built-in advantage for New York. So you're going to see a lot of times where, because I only take like one trade a week in London. I don't really go in here every single day, but it gives me the context of what to expect on the rest of the day through New York, and that's where the money's at. The easy bread and butter trades, even if you guys are sitting at your jobs, okay, if you're changing tires at a Jiffy Lube, well, Jiffy Lube, they don't change tires, do you? That tells you how much of a mechanic I am. Wherever you're at, if you got a smartphone, it's easy to get in there between 7 o'clock and 9 o'clock in the morning and just sneak in a trade, okay, and wait for the remainder of the daily range to unfold. That's all really this idea was here on Canadian dollar. I had already seen the rally up on the dollar. It's pausing. It's crouching just below what? A liquidity pool here and an old high, which is 131.52. And again, that's over here. Right over here. All these equal highs, that's what they ran. Okay, and it's going to be a huge impulse to want to run those out, despite the fact that just looking at Fibonacci ideas alone and resistance, because they make this look like resistance in the textbooks. Okay, hit resistance, here it is. All right, here's a Fibonacci 79% retracement level, and it starts to give it to them, see that? But no. We talked about this being a lead into a run on liquidity above the marketplace. So it's not just Fibonacci that wins the race. It's not harmonic patterns. It's not all that business, and it's not simply support and resistance. You have to have an understanding of where the money is, and that's going to be in the form of liquidity. It stops, open, float, in other words, pending orders that would be above or below the marketplace, and fair value. So that's all I got for today. I'm not going to hang around for questions or anything like that, but I will be giving you probably a bunch of charts tonight. There won't be any more videos because I am literally wasted. So as soon as this sugar rush burns off me, I drank an Inshore to give myself a little bit of boost before I got on here. When this burns off, I'm crashing. So I'll probably, who knows when I'm going to be awake. So the video is done now. It'll be online in 20 minutes or so. And then I will, like I said, I'll load the forum up with some charts and notations about anything, how we end up closing for 3:30 today. And until tomorrow, Munchkins, I will catch you on the rebound.